If you're confused about why prices have jumped recently, this is going to be the clearest explanation you are going to get. I'm David, and today we're breaking down exactly what changed in Australia's 5% deposit scheme, why it hit the market the way that it did, and what you should actually do about it, whether you are a first home buyer, an investor, or a homeowner. Before we talk about the impact, we need to understand why the scheme was created in the first place. For years, the biggest barrier for first home buyers has been the deposit. Saving 20% in major capital cities like Sydney, Brisbane, or Melbourne can take 7 to 12 years, basically a decade, to just try to keep up with rising prices. So the government introduced the first home guarantee to speed things up. It allowed people to buy with just a 5% deposit and no lender's mortgage insurance, originally with lower income caps and lower price caps to keep it targeted. On paper, great idea. In reality, when you make entry dramatically easier, you change where and when the demand hits the market. And this is exactly what has happened. Then came the 1st of October, and everything shifted. Places under the scheme became unlimited, income caps were removed, price caps were increased massively. We're talking Sydney up to 1.5 mil, Melbourne to 950,000, and Brisbane up to 1 mil. And all of it with the same 5% plus cost deposit. The intention was simple, make buying faster and more accessible. But these changes didn't just help the original demographic. They opened the gates to a much larger pool of buyers, and the market reacted almost immediately. But before we keep going, if you're enjoying the video, hit the like button. It really helps the channel grow and have more people like yourself find the channel. Now, in my opinion, this is where things got really predictable, but no one really spoke about it. Demand surged straight into the price bands that now fell under the scheme. In fact, 1 in 10 homes purchased were done so under the first home guarantee in the month of October. But supply stayed extremely tight. Listings were low and new builds didn't just magically increase. It's like giving 1,000 people tickets to the same concert, but keeping the venue the exact same size. Properties under the cap became the hottest part of the market. Multiple offers, faster price growth, and buyers getting emotional and over-competitive. Above the caps, prices still rose, but nowhere near at the same intensity. And then there were the banks. Despite having the best economists in the country, they clearly did not prepare. Pre-approvals that once took a few days are now blowing out to 10 to 20 business days, which is insane in this type of environment. The demand had spiked and the system simply just wasn't ready, and the prices responded. Now let's back it up with a little bit of data. National home values rose 1.1% in October 2025 alone. This is the fastest monthly rise in the last 2 years. Homes under the scheme caps grew even faster at 1.2%, but what the data doesn't show is that certain pockets and certain suburbs in these price caps have moved faster than others. Then you have the borrowing data. Investor lending exploded, up 13.6% in the September quarter alone. Investors are clearly moving quickly because they're reading the tea leaves. Overall, there has been a surge in lending applications of 39.2% in October 2025, and the government then estimates that up to 70,000 homes will be purchased under the Home Guarantee Scheme in its first year. APRA has also flagged increases in high LVR lending and more aggressive bank competition. This usually happens when lenders chase market share. And now that we have buyer confidence and competition all coming in at the same time, price rises will obviously follow. And now we're actually watching this play out in real time. With first home buyers rushing into the market, investors increasing the amount of competition in those markets as well, we're seeing the added element of FOMO increasing these prices at the same time as well. Now let's zoom in on the major cities, because the effects haven't been evenly spread at all. They've been concentrated exactly where the scheme allows people to buy. Sydney has seen a surge in anything under $1.5 million, especially units, because almost their entire apartment market sits under the cap. As the inner suburbs become increasingly unaffordable, buyers are also pushing 40 to 50 kilometres out of the CBD just to stay in the house game. Melbourne has seen extreme shifts in the middle ring suburbs. Areas like Sunshine, Craigieburn, and Dandenong all sitting comfortably under the $950,000 mark and have become competition hotspots. Even investors are starting to jump in after sitting out for the last few years. And now Brisbane is seeing similar behaviour on the north side, where sub $1 million homes are growing faster than the broader market. Some pockets are hitting nearly 2% a month. And Perth, which was already running hot, has seen properties underneath $850,000 jump more than 2% in just a single month. So the pattern is obvious. The parts of the market made newly affordable by the scheme are now the fastest moving segments in the country. It doesn't take a genius to see that one coming. I will maintain that this scheme is the best way for people to access the property market and get their own slice of Australia. It helps first home buyers who act quickly and have strong enough incomes to service the higher loan amounts. It's also been a gift for homeowners sitting inside those price bands because their equity has climbed rapidly and it is continuing to rise. Investors who target these segments have also benefited, especially those who got in early and now are riding the surge. But this all comes at a cost. The people who hesitated, the ones who needed a few more months just to save, now find themselves priced out of the very suburbs they were aiming for. Buyers that were targeting just above the price caps are watching the affordability gap widen right in front of their eyes. And that small group that were waiting for a big price drop are realizing that the scheme has made that far less likely. So yes, it did improve access just like they promised, but it also made the next round of affordability harder. So the truth of the matter is, the scheme didn't actually fix the underlying problem. It didn't create more houses, it didn't increase supply, it only increased demand. New builds are still incredibly low, listings are very low. APRA is also warning about the lending risk. This isn't just about the 95% loans now, it's also about investors pushing to 90% LVRs just to keep buying property because the prices are surging. Household debt is now at an all-time high. The scheme only solved when people could buy, just not what they could buy. So what do you do now? If you are a first home buyer, these markets are moving faster than you can imagine. So if you think you might be ready, it could be time to get moving. Look at the suburbs with prices underneath the caps with strong owner-occupied appeal. This is generally what's going to help with your capital growth. You always need to be buying like an investor because this is what's going to help grow your wealth. Remember, we're making a massive financial commitment and need to couple it with the emotion that comes with buying a home to live in. You also need to get your pre-approval done early because the banks are slower now more than ever. If you're an investor, follow the demand. Look for spillover suburbs, not the headline ones. But if you're someone who doesn't know what they're necessarily looking for, using a good, experienced investment buyer's agent can save you thousands. Now, if you're a homeowner, expect your equity to be rising quickly if your property sits in those suburbs that might sit under the cap. If you're upgrading or thinking of selling, this could be a strong window for you. You can also review your borrowing before next year's competition ramps up as well. The Home Guarantee Scheme didn't fix affordability. It increased demand and allowed more people to have access to the scheme, which means it's putting you further and further behind if you don't act quickly.